Hey everyone, Chaps here, and this is everything you need to know about the Backdoor Roth IRA in under, let's say, 10 minutes. Let's see if I can do that. Alright, so as usual, prefacing this with a few things. I'm an engineer, not a finance guy, didn't go to school for this, but I learned a lot in the past couple years, so I figured I'd share some of my knowledge. Today, when going over this Backdoor Roth IRA, I'm going to go over some of the high-level points and the things that everyone really needs to know about doing this. But I'm not going to go into all of the fine little details. I'll have some links below if you want to do it yourself and you want to read up on some more of that. Alright, so what is a Backdoor Roth IRA? And actually, if we take a step even further back, what is an IRA? An IRA is an individual retirement account. It's an account that you put money in order to save for retirement. These accounts have tax advantages. With a traditional IRA, you get a tax break now, but you owe some taxes in the future. With a Roth IRA, you pay taxes now, but you don't owe any taxes on earnings in the future. I have an entire video dedicated to this, as well as more details that I'll link down below, but that gives you the basics. So, tax advantage account, that's great. Why not just throw all of your investments in there, right? Well, unfortunately, there's some limits on it. Like in 2022, the limit was $6,000. In 2023, that's increased by $500, so now we're at $6,500. I'll also note that if you're 50 or older, you're actually allowed an extra $1,000 as a catch-up contribution. There's also an additional limitation on who can contribute to a Roth IRA. Here's a table showing who's able to contribute and how much. Note that this table here is for 2023. With inflation changing, this table's probably going to change every year. For many people, this limit just doesn't matter. For others, though, it can be quite annoying. What if you make too much and you can't contribute to a Roth IRA? And what if you have a 401k plan through your employer so you can't get the benefits of a traditional IRA? Well, that is where the Backdoor IRA comes into play. If you're able to contribute the full amount to your Roth IRA, then none of this really applies to you. You can keep watching if you want to learn about it though. But what if you're in that boat where you can't contribute the full amount or you're not able to contribute anything to your Roth IRA? Well, then this is for you. Stay tuned. The wording in all of this is key. And that key word that keeps coming up is contribution. There's limits on how much you can contribute. There's nothing about limits on rollovers or conversions. So what you do is this. Step 1, open a traditional IRA account if you don't already have one, and I guess open a Roth account if you don't have that as well. Step 2 is contribute the max allowable to your traditional IRA account. Step 3, roll your traditional IRA assets into your Roth IRA account. And there, you're done. You've now contributed the max allowable to your IRA. This is through a contribution to your traditional IRA and then a conversion to your Roth IRA. The total Roth contribution is $0, but you now have $6,000 from 2022 or $6,500 in 2023 in your Roth account, and whatever it is based on this year's limit. I guess I'll explain that in a little bit more detail here. So what are the exact steps? I'll use Fidelity here as the example. Go to Transfers, select your bank account to transfer out of, and then select to transfer it to your traditional IRA account. Add the $6K or whatever you're trying to move and complete the transfer. In 2 to 3 days, this transfer will complete. If this is your first time setting up the traditional IRA, it may take closer to a week for the cash to settle. Once it's settled, go in and set up a new transfer. This time, select from your traditional IRA and to your Roth account. Then just tell it to transfer the balance. Hit submit, and you're done. You may get some warnings saying that taxes may be owed come tax time, but generally they're just disclaimers that you can skip. It's in your best interest to understand these disclaimers, but the short version is that the money that you move that hasn't been taxed yet will need to get taxed. You could always just call your brokerage firm and walk through it with someone. They'll know exactly what you're trying to do. And now there's a few things you need to watch out for, so I'll highlight a few of them here. First off, any earnings or gains between when you contribute to the traditional IRA and when you roll it over will be taxable. Avoid these taxes by following 2 simple steps. 1, when contributing, add as cash or money market accounts that basically earn no interest. Number 2 is do the conversion ASAP so that it has no time to gain interest. Check back about a month after you do the transfer and you might see some residual cash sitting in the account. That's just the interest being paid out from that short time that it was sitting in the account before you did the conversion. Just set up another transfer and yeah, you're going to owe some taxes on this money at this point, but really it's just a few cents, so it doesn't matter. Back to our list, the second trap to look out for is the pro rata rule. The short version here is that you need to empty the traditional IRA of its contributions by the end of the year that you do the conversion. The simplest way to avoid this is, again, to follow the steps above and do everything ASAP. And finally, as always, we have the tax forms. Now, to be honest, I haven't filled out these forms myself yet, so I'm not going to pretend I know what I'm talking about here. There's plenty of resources online, though, that will walk you right through it, and it seems pretty straightforward. Again, I have some of those resources linked below. From what I understand, it's pretty simple, and once you learn how to do it, you can do the same thing year over year. I guess I'll also add that there's one last little trap to look out for. It's not really a problem, it's just a missed opportunity. Once the money is in your Roth account, don't forget to invest it. It doesn't really do you much good if you just leave it sitting there as cash. Now, the last thing I want to hit on here is the legality. At the time of this recording, it's still legal. There definitely has been discussion of closing this loophole, though. Personally, it seems like something that should be closed because it's just taking the wealth gap and making the wealth gap larger. But hey, if it's allowed, why not take advantage of it, right? Anyways, that's been my attempt at trying to explain the Backdoor Roth IRA as quickly as I can. If you have any questions, just leave them down below or hit me up on Twitter. Also, if you see any errors in this video, please let me know. I'm pretty new to this, and I'll pin a comment with all the updated things, and I'll post a new video if it warrants that. So this year's been a crazy roller coaster for me in terms of learning financial stuff. I hope you guys enjoyed this video of I'm an engineer, so just some finance noob trying to explain finances or his learning in finances to everyone else who's probably trying to learn finance as well. So if you enjoyed this, please consider hitting that like button and subscribing. Thanks for watching, everyone, and I'll catch you next time. See ya.